Hey everyone, and welcome back to another video for today. So I'm here to calm down your nerves because yesterday SoFi reported one of their best, if not their best quarter since they became a publicly traded company. Stock went up 17-18% or so, closed out the day up only 6.6% after being up 200% over the past 12 months. Then, after the market closed, stock is now down 8.5%. Now, why is that? Right? Everybody's freaking out. Everybody's freaking out, and everybody's basically forgetting what has happened a couple of hours before, right? Because a couple of hours before, everybody was happy. Amazing quarter, best company on the planet because the stock went up. Of course, a lot of people said, okay, this is amazing because of the business performance. That's the most important part, right? The business is doing extremely well. So what exactly has happened? Well, we first had this come out. SoFi Technologies announces public offering of common stock. SoFi announced an underwriting public offering of $1.5 billion of shares of its common stock. In connection with the offering, SoFi expects to grant the underwriter a 30-day option to purchase up to an additional 15% of the shares of common stock offered in the offering. All of the shares of common stock in the offering will be sold by SoFi. So yes, dilution. SoFi intends to use the net proceeds from the offering for general corporate purposes, including working capital and other business opportunities. Then, a couple of hours later, we've got this. So they priced its previously announced underwritten public offering of 71,942,450 shares of its common stock at a price of $20.85 per share. The offering is expected to close on July 31st, 2025. So, what's the big issue here? Well, the big issue is that there is no issue. There's just a lot of drama. There is no big issue. The issue is that a lot of people did think that, suddenly we're going to go to $30, to $40, to $45, short squeeze, and all of that. A lot of people probably bought the top of the day at $24, $25. Now, to put it plain and simple here, if you bought at $24, $25, for all the reasons other than you think the business in the future will be much bigger, then I'm sorry to say, but tough luck, right? Tough luck. If you bought at 24.25 because you thought that the quarter was incredible, you thought that the guidance was great, you thought that the earnings call was great, you think that the business will be worth way more in the future, then you probably don't care. You're probably going to add even more right now if we drew up under $20, right? Plain and simple. Because shall I remind you, this was the quarter. Adjusted net revenue up 44% year over year. Adjusted EBITDA up 81% year over year. Fee-based revenue up 72%. Member growth 34% growth. Product growth also up 34%. And management did raise 2025 guidance. This is not a business that is struggling. This is a business that is thriving, that is firing on all cylinders. This is something that we've talked about yesterday in the earnings review. Of course, you might say that, but probably your opinion has changed now that the stock... No, my opinion has not changed one bit. Yes, of course, dilution is not great. But have they in the past diluted us and it hasn't worked out? No, they did it. It was good for the business, which means it's good for shareholders, which means it's good for the future of this company. And if I thought I would be a better CEO than Anthony Noto, then I'd probably apply for the job. But I don't think so. I think he's the perfect CEO for the job and for the company, and he has delivered time and time again. And remember, it's in his advantage to make sure that the stock price is as high as possible for as long as possible, because that's how he will get paid quite a lot of money. But Anthony Noto doesn't think about tomorrow, next week, next month, next quarter. Anthony Noto thinks about decades. Okay, Anthony Noto thinks about the long-term future and competitive advantage that this business is going to have. You don't believe me? Well, let's have a listen to what he said during the earnings call.
We feel great about the business. It's operating on all cylinders. The results show that. Our outlook shows that for 2025. I think our biggest challenge beyond 2025, quite frankly, is deciding what not to do. There are more opportunities on the table for us than ever before. It feels like we're just getting started, even though we've been at this for 8 years and have delivered good, consistent growth over that time period. Our goal and prioritization will be to allocate resources to those segments and those businesses that can drive the best compounded growth over decades as opposed to just a couple of years, with the overall goal of an ROE that's 20 to 30%. So as Chris mentioned, there's a few things that turned out to be a lot bigger opportunities sooner than we thought, and we're going to allocate resources to those. We hope to be able to allocate resources to everything, but that's unlikely, but feel great about the outlook.
Our goal and prioritization will be to allocate resources to those segments and those businesses that can drive the best compounded growth over decades, as opposed to just a couple of years, with the overall goal of an ROE, return on equity, that's 20 to 30%. There's a few things that turned out to be a lot bigger opportunities sooner than we thought, and we're going to allocate resources to those. So again, this is about accelerating the business. Okay, I don't understand why people are freaking out about this. It's, to be honest, most of the times when these things happen and people freak out, you just have to ask them one simple question. Do you hold options? If the answer is yes, you understand why they freak out. Because if the answer is no, I just own shares, then usually they don't really freak out that easily. This is not a red flag. This is not even an orange flag. Okay, this is just Anthony Noto and the company management knowing what is best for the business. And yes, they did it when the price of the stock was higher. Plain and simple. Moving on to something else that Noto said.
How do you think about spending for the remainder of the year on a discretionary basis? Is it towards things like member acquisition, or is it accelerating certain product development? And then as the loan platform business actually becomes a larger piece of the overall business, do you think SoFi still maintains that 30% incremental margin kind of target?
So I think you're starting to recognize we clearly have a lot of operating leverage in the model, and our margins could be well in excess of 30% on the EBITDA line. I've been a student of the evolution of direct-to-consumer technology companies starting back in 1999. And I think it's really critical that we invest for the future. We want to compound 25% revenue growth for decades, not just for a couple of years. So we don't want to underinvest in the business.
I'm not going to continue the whole earnings call, but this here, we want to compound 25% growth for decades, not just a couple of years. So we don't want to underinvest in the business. So again, I go back to my original point. This is about investing in the business, accelerating the growth of the business. Now, one of the reasons why people might have freaked out is because of this interview that Anthony Noto gave a couple of hours prior on CNBC. Have a listen.
Finally, with the shares going from basically 9 to 24 in the span of a few months, is there any likelihood that you'll want to raise some capital or kind of reset capital levels?
Listen, we're always looking at our balance sheet and making sure that we have our future plans well capitalized. We feel like our capital ratios are strong. They're obviously available for investors to take a look at, but they're well above our regulatory minimums. The capital market situation is one that we're always evaluating to keep our cost of capital low, but we feel like we have adequate capital on the balance sheet, but could be opportunistic from time to time if it can lower our cost of funding and help give us continued growth capital. But right now, our plans are adequately funded with our balance sheet, but we'll continue to evaluate opportunities.
We continue to evaluate our opportunities. I don't know what the rules are when you do a stock offering, if you can go on TV and say something else or something that might impact that. I don't know how that works. But again, Anthony Noto and the SoFi team know what's best for the business. Plain and simple. And so if they thought this was the best thing to do right now to accelerate the growth of the business, to make sure that the future of SoFi is going to be better than before, then this is the right move. It's really not that complicated. It's really not that complicated. And just an FYI, the guidance that was given for fiscal year 25, especially EPS here that is now higher than before, this is taking into consideration what they just did, which makes this number even more bullish, right? Because if there are now more shares outstanding and you're still expecting here EPS of 31 cents, if you're still expecting this type of guidance for the year, still pretty good, no? So again, nothing changes. These numbers don't change. Everything that they reported doesn't change. The quarter was still incredible Guidance was still great. The comments were still great as well. Stock price did change. That's about it. And then for those that do panic just because they see the stock, oh, the stock was at $25. Again, if you bought at $25, if you liked it at $25, you will probably love it here at closer to $20. Unless you only bought it right here at $25 because you thought it would be going to $30 and then you would sell. Then, okay, again, like I said before, tough luck. Investors, long-term investors are probably wanting to see this stock drop even more so they can buy more shares, because we know that the business today is 10 times better than what it was before. Okay, it's a very, very good and strong business. And even with the overreaction, we're back to prices not seen since last week. Big freaking deal. Seriously, big freaking deal. Stock here right above that 20-day moving average. Of course, throughout the day, we can see more selling. We can see more buying as well. Don't forget, this is a stock that is up 200% over the last 12 months and was at around $9 or so in April. I know should have never been at $9 in April, but yeah, we went from $9 to $25 in a matter of 3 months or so. And so, yeah, to me, if I see an opportunity to buy a great business, even if SoFi is already quite a big position for me, if I see the opportunity to buy a great business at a cheaper price, yes, of course, there is dilution that you have to take into consideration, but I'll take it. I'll take it because I think that SoFi in the future can become a $100 billion business. We're now at 23 billion or 24 billion or something like that. So why should I care what happens in the short run? If they are making strategic moves to make sure that SoFi of the future is going to be much, much stronger, revenue-wise, profit-wise, that's all I need to know. It's all I need to know. Plus, track record is flawless from this management team. And so, yeah, all in all, that's all I have to say. I'll be going live with Jose pretty soon, so you can ask me more questions there. And I'll see you in the next one. Bye-bye.